Hi, I'm Danielle Hale, Chief Economist for Realtor.com, and here are this week's things you need to know. Another 5.2 million individuals filed initial jobless claims in the last week. This brings the total filed over the last 4 weeks to 22 million, and probably puts us in the ballpark of a 15% unemployment rate for April. Now, for context, in the last recession, the top unemployment rate was 10%, but it was much longer lasting than I expected this episode to be, and that's important for consumer spending. Already in March, retail sales were down 9% overall, and when you look at big ticket items like spending on cars or furniture, those were down more than 25%. Turning to construction, we saw big drops in housing starts and permits in March, down 12 and 18%. Builder confidence also took a hit, suggesting that the worst is still ahead of us in the April and the May data. One bright spot, though, housing starts and permits both had such momentum going into this period that despite the large drop in March, they remain above year-ago levels. That's really a testament to the momentum that they had and a sign that housing will probably play a role in the recovery. Digging into housing market data, Realtor.com inventory data show that sellers are hesitating to list, with new listings coming to market roughly half the level that they were this time a year ago. COVID is also upending the normal seasonal pattern that we see in the housing market. Prices are rising from early March to early April, and this year they've been absolutely flat. So buyers and sellers need to keep that in mind as they're navigating. This is not a normal market this year. You may have heard that mortgage applications are up, and that's true for refinances, but purchase applications are down slightly for the week, about 35% lower than they were at this time last year. One bright spot, mortgage rates remain near record lows at 3.31% this week, according to Freddie Mac data. However, getting that mortgage can be a challenge for borrowers, with banks publicly announcing that they're raising down payment requirements and FICO score requirements to keep up with the changing credit risk picture. Economic data is breaking records and will continue to do so in the months ahead, hammering home just how unprecedented the situation is. Against this backdrop, housing is soft, but there are reasons for optimism in the medium to long term as seller and buyer expectations remain relatively aligned. My team and I will continue to track these developments and keep you up to date.